more forceful
performance. Mitesh, I'm just going to, ask you to interrupt you over there. ACC's earnings are out, so let's just address those numbers. 232 crore rupees on the PAT. Now, we're working with a number of 182 crore rupees. I'm not quite sure whether these are the consolidated or standalone numbers, because our poll is a standalone figure, and that's indicating a PAT of about 182 crore rupees. This seems like a sizable jump from what we've been pricing in. Maybe there's an extraordinary item over there. I'll just come to that in a bit. 2930 on the top line, so that's come in absolutely in line with what the ET Now poll was pricing in, because we were expecting a meager uptick of 2%. That's exactly what they've delivered this time around. But the PAT has sizably jumped. We were not really expecting this to come in, and I'm going to still wait by and see, why this jump has come in really in terms of the PAT performance. I think they've restated their numbers, because the comparable figure that we were working with was completely different than what they have actually delivered. 240 crore rupees is a comparable figure, but 182 crore rupees is the PAT estimate that we were working with. Just maybe there is some jump coming in there. I'll just come to that in a bit. Although what was working for cement majors this quarter was definitely the RMC costs, which must have gone down sizably. So definitely there is a benefit to that effect over there. We're expecting a 5 to 7% volume growth, and volumes clearly have been aided by a low base this time around for ACC. Realizations, that's the key figure that you need to look out for, because we were expecting the realizations to get to take a hit this time and impact the profitability. Just maybe realizations have actually come in better than what the street was expecting. No, they haven't actually.
I mean, they're lower by 8% on a year in terms of the cement realizations. EBITDA, by the way, has seen a significant bump up at 369 crore rupees, while we were working with a number closer to 350 crores. So that's the ET Now earnings report card, reflecting that on the profit figure, a major bump up above street expectations, and dittos the case with margins. Mahesh Bhandag, research analyst, joins in as well on the show. Mahesh, just walk us through your first reading of the numbers. That's 232 crores by way of the PAT performance, and revenues at 2930 crores in terms of sales. How do you read into this?
The numbers are much ahead of what we were expecting. I think we need to wait for some of the final figures to have a, but obviously even on the top line as well as on the bottom line, there is a good beat on the numbers.
Siddharth Purohit as well is on the phone line with us. Siddharth, this seems like a decent set. I mean, the PAT has definitely beaten all in every street estimate. What to your mind could have contributed to this PAT jump from ACC this time?
As you said, the bottom line has been little ahead of even our estimates, but possibly that could be because of the higher volume could have contributed. We need to really check what is the volume number that is yet to come, I believe. So possibly we need to check what is the volume number, and then it will be possible to see the requirement. But certainly the numbers has been a little ahead of our estimate on the bottom line front.
Yeah, indeed. We're working with the realizations, cement realizations for ACC this quarter. They've come in lower by 8%. The EBITDA margins have dipped this time, 12.6% versus a comparable of 14.3%. And yeah, the top and the bottom line have come in line with estimates. Actually, the PAT has been a beat, and margins as well have come in higher than estimates. Siddharth, what's the realization and volume figure? Okay, Mangesh, what is the volume as well as realization number that you're working with? And does it seem like, realizations could have dampened? I mean, had it not been for realizations, we could have seen numbers come in way ahead of the estimates?
The press release is out now. The volume numbers are really ahead of what we were expecting here at around 6.36 million tons. So it's a growth of around 9% from the last quarter. Even though last quarter was a pretty weak in terms of its base, since some of ECC's plants were down, but definitely this number is better than what we were expecting. Secondly, what management has said in the press release is that the sale of premium products has now risen to 53%, which generally gets them higher realization. And with the lower input cost as well as the reduction in cost, since the utilization in this quarter has been much better, have been pretty good. So overall, I think a very good set of numbers from ECC.
Okay, good set of numbers, and they've been a beat, especially when it comes to PAT. And like Mangesh just highlighted, the press release is indicating the fact that volumes as well have come in higher than the street estimates. And Mangesh, just really a call on the stock as well, considering the street is now so gung-ho about the prospects of the cement sector because of the thrust that the government has on infra spend, and now that ACC numbers as well are indicative of that, is ACC a buy, or would you just tamper with your price targets?
For me, ACC is a buy. In fact, we like it currently over Ultratech also, purely based on valuations as well as the scope of improvement in terms of its cost structure. And our view is that even after the restructuring, ACC would be a preferred player to play the Indian cement growth story, and their recent expansion is getting completed. So they would be able to show volume growth. So at almost 30% discount in terms of valuation to the large peers, ACC still makes a very good bet for investment.
Okay, that certainly has been a beat. In fact, we've got the sale volumes at 6.36 million tons. Let's go across to Vivek as well from our research desk to get a wrap as well as a closer look at the numbers of ACC. Vivek?
That's right. So as you rightly mentioned, the story is actually all about the volumes. Volumes have come in close to 6.4 million tons. And if you look at this volume figure, it is the highest volume figure since the first quarter of 2014. So that's how strong the volumes have been as far as ACC is concerned. Now, if you're talking about the top line figures, 2927, which is in line with what the street was estimating, and the profit has come in, much above what we were anticipating. We were anticipating a profit of only around 180 crore. So almost a 50 crore beat on the profit if you're looking at it. Now, if you're talking about the EBITDA has come in at 369. Of course, we've excluded the other income, which actually includes some sales incentive. So that too has been a beat on what the street was estimating. Now, we were actually anticipating a weak realization as far as ACC was concerned. However, realizations have been very good this time. Company has also indicated that the credit offtake has been very good this quarter, and that has also contributed to the good performance.
Oh yeah, the key is in the volumes, which have actually come in higher than what the street was expecting. We were expecting the range of about 5 to 7% in terms of volume growth. And, remember, it's a low base. Therefore, also it's a low base effect, which is playing in terms of the volumes. But the RMC cost, my guess is, must have gone down. The realizations as well have come in line with what the street was expecting. Net, it's a good number that we have seen from ACC this time around. The cement realization actually has come in lower, 8% on year-on-year basis, and the volumes have shown a growth this time around. 6.36 million tons is what they've managed to clock. So good beat from ACC. Let's see what the stock as well is doing before I quickly go to Siddharth Purohit and get in his take on ACC as well. Been a little bit all over the place, but definitely suffice to say it's recovered quite considerably from the lows of the day. Siddharth, a quick take from you as well on ACC. Seems like an impressive set.
Yeah, the volume also has been little ahead of estimate. However, the real concern is the realization drop. It has been close to 9%, I believe. And I believe at the current valuation would be little cautious, and we will take a neutral stand at the current valuation on ACC. Though the volume and number has been little ahead of the estimate, but we believe the recent run-up leaves little scope for further appreciation, and we would rather prefer Ultratech from a growth perspective for next 2 years. So our topic could be Ultratech rather than ACC at this valuation point of view.
Okay, Siddharth, Mangesh, gentlemen, good chatting with you and analyzing the numbers, but I think it's the market which deserves more attention at this point in time, because at the lowest point of the day, the Nifty is now sitting at a triple-digit cut for itself.